you suddenly like Bitcoin, Kevin? What happened?
Well, when facts change, I change. And what changed and what kept me out of, I actually owned personally crypto since 2017, but couldn't talk about it because, as you recall, the regulators, particularly in large financial markets, including US, Canada, Switzerland, France, Britain, the Eurozone, were not really on side with Bitcoin for quite a while. That has obviously changed in the last 90 days when we saw for the very first time an ETF emerge in the Canadian market as Canadian regulators allowed it to occur. Same with Switzerland, same with Australia, same happening in Euro, same happening in Britain. So basically, the regulatory stance is changing their view on specifically Bitcoin. Now, as an asset class, that interests me because I obviously own positions in the Swiss franc, the euro, the British pound, the Canadian dollar, the American dollar. So whether I view it as an asset or whether I view it as a currency, it deserves a weighting in my portfolio now. Now that I can own it without a regulatory backlash, which is what I'm concerned about. I'm in the financial services industry. I have investments in a wide range of different companies, from fintech to indexers like O-Shares, et cetera. And I service the institutional client. I service the sovereign fund. That's what I do with all these financial services companies. I can't be seen offside with the regulator. And now I can play in Bitcoin. I can allocate to Bitcoin in a way I never could before, because now the regulatory environments in all of these jurisdictions is slowly coming around.
Good morning,
Kevin.
Kevin.
Interesting that you say. Yeah, it's interesting that you say that in 2017 you owned some Bitcoin, because just last month you went on CNBC saying, you didn't like crypto because of the volatility. But what do you think about the volatility now?
Well, it has volatility. That's not going to change. But obviously, if we get more interest from institutions, and I believe that's happening, let me point something out. I get to talk to these institutions practically every day. I would say less than 10% of the potential owners of Bitcoin own it right now, because they're trying to get their heads around what this is. That's number one. Number two, they're trying to go through their compliance departments and understand whether they can buy it as a fiduciary or not. But here's a new issue emerging that I don't think a lot of people have focused on, because certainly, as you've called me out, I've had a lot of feedback from people regarding my calling it garbage and all that stuff. And listen, I have to live with the words that are digitally impressed out there forever. I get it. But I have certainly changed my view on it as an asset class, and I've now brought it up to a 3% weighting. But here's something you got to get your heads around, okay? In most cases of the large institutions that I talk to, they have two committees to concern themselves with regarding crypto. Before it even gets to the investment committee, which would decide on an allocation, it has to go through the sustainability committee, because there's a whole new metric around the concerns people have around sustainability, about the origin of the coin. Was it mined in China? Is it mined in a country that's under tariff or restrictions with the US government? All of these new provenance concerns, which were not on anybody's mind when crypto was simply the purvey of the hedge fund or the retail investor, now it has to have a new standard. And now that standard is, where did it come from? How was it mined? Was it mined sustainably? How do I know I'm not supporting mining in a country where human rights are abused, like China? All of these issues are at the fore at the institutional client. So what I'm doing, because I'm very concerned that I know where my coin came from, is I'm starting to invest in miners themselves so that I can have a portion of their output and know that my coin is clean. My coin was mined sustainably. Everything I have fits around those institutional concerns. A brand new problem, or a mountain to climb in the case of cryptocurrencies.
So before we discuss provenance, one question I have is this, is that your investment theses often deal with steady streams of cash, whether it's royalties or dividends. Your ETFs often pay dividends. So those are kind of like bonds. Bitcoin doesn't pay any dividends. It doesn't pay any returns other than the capital appreciation. So has your investment thinking changed overall?
No, I've always held a 5% weighting in gold, 2.5% physically held, and I pay for the storage, and I trim or add to my position using ETFs every quarter when I rebalance. I'm going to view Bitcoin as an asset, as a property, as something that retains value as a physical property. You have to get your head around that. Now, many investors won't get there, but I have made that turn, as you mentioned earlier, 180 on it. I'm looking at it that way. It's a volatile property. It's going to get a weighting up to 5% in my portfolio. It's at 3 right now. But now I have this new concern because I've had a barrage of calls from institutional clients asking me, wait a minute, Kevin, is this anywhere in O shares? And I'm saying, no. This is my personal portfolio right now. We do not have any crypto inside of O shares. And why do you ask? And they're saying because we have to go through a checklist of the provenance of those coins. We are not going to support China mining. We're not going to support any coin mined in a country under sanction with the U.S. I mean, all of these different things that nobody ever thought about. And that's why now my new solution is, okay, I'm going to reach out to miners. Let me give you an example. Let's say you're mining and you're not quite carbon neutral. You need an upgrade in your hardware. You need a couple of $1 million. Come to me. I'll invest. We'll do it together. I'll broaden your technology to make your production more efficient. And then I will get a royalty. Remember that word, royalty? In the form of virgin coin that you will pay me off our production because I'll become a shareholder in your mining facility. I have dozens of those conversations going on right now because I can bring a lot of capital to that market and I can bring a lot of technology to that market to make them more productive. There's plenty of miners that are barely making money because their equipment is too old or their source of electricity is too expensive. And my own staff cares about sustainability. We do not want to be using more electricity than we have to. This is an expensive, we've got millions of coins left to mine, and we don't want to do it unless it's on a sustainable basis.
So, welcome. So we know your thoughts about Bitcoin have changed. I'm curious what you think about some of other cryptocurrencies, like if you're paying attention to what's happening in the DeFi world, or specifically what you think about Dogecoin, which, Mark Cuban, Elon Musk, all big fans. What's your take on Doge?
I think the market will develop, but if you wanted to think of the fiat currency of crypto, it's got to be Bitcoin. I mean, that is the number one that most institutions are looking at because of its performance and also the size of its AUM. It's, $1 trillion. There's no other coin getting close to that. It doesn't mean other coins don't get there. And over time, you can index with other coins if you wish. But for me right now, there's only two. There's Ethereum, obviously, and that's going through some transitional issues. But Bitcoin is the granddaddy of them all. And if I'm going to allocate 3%, it's going to be there. And that's also where I can control where my coin is coming from. So over the next year, my guess is I'll probably be partnered with 5 to 10 different miners that I can actually get paid virgin coin that I helped actually mine with capital. It's that simple. I'm allocating capital out of a fixed income. This is where it's coming from. My allocation has been pulled out of fixed income, traditional bonds, and it's being put in to this asset class. But I am not going to buy an ETF because I have no idea where the coin came from, and I don't want that barrage of criticism from my institutional relationships to come at me saying, you don't seem to care about sustainability. I do care, and I want to make sure that my coin is mined efficiently, and I can do that by being an investor in the actual core mining operations in countries like Sweden, Canada, Denmark, here in the US, where we can find a sustainable source of electricity. But you've got to remember, and you know this well, you focus on this a lot, you burn up a lot of electricity just air conditioning the servers. What a waste of money and energy.
Just to quickly go back to the China question, putting aside the geopolitical concerns and putting aside the sustainability concerns, I did hear you say somewhere that you had a problem with one of your investments in China, which shaped your thinking on this issue. What happened in China?
Well, I have many investments in China. I have a huge problem with China. I do not get access to their markets, yet they get access to the U.S. market. When I go over there and invest in manufacturing to my products and services, and I bring them back here to sell them in this market, as soon as they're proven as a hit, in other words, if it's a new product or service and it gets to 5 or 10 million in sales, I see it knocked off in seconds all over JD.com, Alibaba.com, even on Amazon, where I at least have a relationship. I can shut them down if they don't own the IP. And yet I can't access their markets. That's not fair. That's not fair for me or anybody else. I've had this issue for 11 years now. I think we have to hold a very tight relationship with China in terms of leveling this playing field. They get to use our courts to litigate their IP here in the U.S. We can't do the same over there. That's not right. We need to level the playing field. We need access to their markets. And why should I support their miners who don't give a damn about how much electricity they use or how people are treated in the country where it's being mined? That's not right either. So that's my point.
Kevin, are you getting a return on the premium that you would ultimately pay for a virgin coin?
Well, there's, in my mind, this issue is just emerging. I was not aware of it till I came out, as they like to say, and said I was allocating 3%. I had a huge amount of conversation with the institutions we have a dialogue with about this very issue. I don't think that the community, if you want to call it that, realizes how big a deal this is going to become. And the value is going to be, there will be a premium on coin that you can say was mined ethically, was mined on a sustainable mandate or protocol, was mined, and you know the provenance of it, versus all other coins. Consider it the same debate going on with blood diamonds, if you would. Blood coin, the same idea. Is this coin from a place where I can feel that no institution or employee would think it was gained wrongfully? That's the issue. Believe me, watch this happen. Watch this become the number one issue over the next 18 months. And I think miners that are focused on being productive and reducing their carbon footprint are going to be rewarded in the value of a virgin coin. That's what I believe. That's how I'm investing.
Kevin, do you think Bitcoin is for everyone? You mentioned you only invest in your own personal portfolio, not with your clients. But for newcomers coming into the world of Bitcoin, would you say that it's for them?
It's a great question. What's really turned my head around on it is, if the market believes it's an asset, if the market believes it's a currency, if the market believes it's a purveyor of wealth, who is any individual to say not? You can make your decision. It's a binary decision. Think about a decision path. Will I own crypto or not? Yes, no. If it's yes, then it becomes, what percentage allocation should I give to it? For me, that's 3% right now. And I've done very, very well since I even announced I was doing 3%, as you're well aware. And I know there's volatility in it. So instead of being at 5%, I'm willing to live with it for 3, maybe for, a few quarters, and I may increase it. But that's my decision. I would say the world is now starting to look at assets that can't be copied or knocked off, like digital art, and assigning a value to it. And the way you do that is through the platform under which cryptocurrency is actually manufactured. And so this was very speculative 3 years ago. As you know, the regulator was certainly not on board in any country. And I mentioned earlier, they're now on board. And I think digital assets will continue to grow as a holding. Now, would I pay $60 million for a piece of digital art when the bidding opened at $100? Probably not. But does it tell me that there's a market that views that asset as something valuable? Yes, absolutely. There's no question about it. It actually traded in an open market, in an open cry bidding, and there we have it. So I think that supports the premise that if you can create assets digitally that cannot be counterfeited, there is enhanced value. And that's why I'm investing in Bitcoin.
Kevin, my 5-year-old is your biggest fan. He says he wants to be a shark like you one day. What's your advice for him? Does he buy Bitcoin now? And where do you see it 5, 10, 15 years when he goes to college? Where do you think the price will be for him?
I think with Bitcoin, and this is, the angst I had for the last 36 months about it, I choose my words carefully because I'm in such a regulated environment all the time. And I think what's going to happen now is you decide what allocation you want of Bitcoin, what that means to you of your net worth or your savings or whatever. I have some basic rules I'd set to, tell your son that my mother taught me. Never more than 5% in any one stock, never more than 20% in any one sector. There's 11 sectors in the S&P. Now, the thing you really have to get your head around, and I don't think anybody's done it yet, is Bitcoin itself sectoral? In other words, is it like technology or energy or consumer goods? Because if that's the case, you could weight it up to 20% of your holdings. Or is it more like a stock, in which case 5% would be a proper weighting for it if you believed in diversification over a long period of time? I don't think the market's made that decision yet. I think it's coming. Some outliers believe 20% is not unreasonable, but then you would be putting yourself forward in front of a lot of volatility. There's no question about that. But the idea for me with Bitcoin, let's say at 3, is own it. Own virgin, sustainable coins that were mined in a way that you're never going to be criticized for, and just own it for the long term and let it do what it's going to do. I think you'll be very happy over the next decade. My guess is it's going to perform and probably beat the indexes, but nobody knows with certainty. And there's lots of skeptics, lots and lots of skeptics. But for me, it's now, how was it mined? No one's going to be able to say to me that I, own coin mined in China or somewhere else that is not believing in sustainability or human rights.